Hello, this is John from Options Trading Pilot. I'm going to take a look today at the SPX versus the SPY, how I trade both, and it's some different trading techniques. Just so we get this kicked off, my business partner and I, Guillermo, we run optionstradingpilot.com. We also post out our trades in almost real time to our Discord site, which allows people to follow our trades, and then they make the decision if they want to take that risk and what kind of trades they want to take. So Options Trading Pilot, we do one-on-one classes as well. So we're transparent, we're mechanical, everything we do is posted. We trade mechanically, we try to keep the emotions out of it. That's hard sometimes, but that's what we try to do. And some of our returns are right here. You can always take a look at those on our site. So let's get back over into SPX. Now, I don't have very many vices. This is one of my vices, probably that and really good bourbon. This is not bourbon at the moment. We're in the middle of the trading day, so it's iced tea. So SPX is the S&P index. I like trading it almost every day, and I do very short-term trades with this. Everything else I do is mechanical. Debit spreads, credit spreads, naked straddles or strangles, mechanical number of days, and you can look at some of our other videos, 45 days to expiration, 21 days to expiration to get out, putting trades in at the right delta. That's all covered other places. Today we're going to look specifically at what I do or try to do with the SPX on somewhat of a daily basis. So SPX versus the SPY. So this SPX is the index for the S&P 500. You really cannot purchase shares. It's cash settled. It doesn't pay dividends, but it's a representation of the S&P index. And it's about 10 times the value of the SPY. So, so this is the SPX. If we were to look over at the SPY, very similar, but it's a different animal. It's really an exchange traded fund or an ETF, and it tracks. It's an ETF that tracks the S&P 500 index. It does trade. You can buy shares. You can trade options on it. Dividends are paid on it as well on a quarterly basis. And smaller accounts might be better suited in the SPY versus the SPX. But for our purposes today, we're going to look at the SPX. You can really do these things together. So there's really three types of trades, or two types of trades, and then again, something else I look at to kind of help me guide through this process. So this is the S&P over the last year. Let's look at it over, let's see, the last 5 days. I wanted a little better view of that. Let's see if I can go to 10 days. So what, and I'll show you, before we get too far, I want to show you what the trade actually will look like. So this is the SPX. They trade essentially every day of the week. There's also end of month, and then there's some end of month and some AM and weekly and quarterly. So quite interesting. So I have a couple trades on for today, which is June 1st. But so SPX options. So this is where you are. They work to me, they work just like stock options, but they're cash settled. So if I think the market's going down, I can do a simple, we'll just do something simple like this, which is a bear call spread. I'm not saying I would do this one for tomorrow. It might be a little bit tight. Right now, SPX is trading at 4,104. This is a 4160 over 4170. That's a 79% probability of profit. So this trade here, the max profit, you can see down here is 170, and the max loss is 830. We're in the middle of the trading day, so I have a lot of alerts coming in, and all stuff's popping and making noise. So that's just how it goes. But I had a few minutes here before things really kick off at the end of the day. So I wanted to get this recorded. So that's what SPX looks like, daily trading, something like this. Maybe I'd be out here at the 14 delta, can make $70 as a max gain, 430 as a max loss. I generally would put these on at the beginning of the trading day, and I'll show you. And you can do the same. You can do an iron condor, you can do butterflies, jade lizards, naked, anything you can do with an option, a stock option, you can do with the SPX in general for trading. So one of the first strategies I like to look at, this is a 3-month chart. So if I go here, I look at the 10-minute chart over the last 10 days. This should be a pretty good example. 3 minutes, that's a little tight. So SPX, and you can see where the volume is during the day. It's right at night and right in the morning generally. So I'm not the only person that trades these. And very good volume, as you'll notice. Very good volume, very good bid ask. So, lots of volume every day, very tight bid ask. So you get good fills at good prices generally. So this is the SPX over the last 5 days with 10-minute candles. It's refreshing all the time since we're market's open. So one of the things that I would do is a gap fill. Sometimes it works, sometimes it doesn't. For instance, this was last week. Market drops here. I'm looking at Fibonacci, I'm looking at support lines. This is my 50-day moving average. So it blew right through the 20, but 20 for me is more of a guide. The 50-day is a lot more important, and the 200-day, this pink line right here, is really key. So I'm looking at the 50-day moving average a lot, and then I'll look over at the crossovers between the 50 and 20 as well. So my 50-day, boom, we dropped on the open. I went long right here a little bit early, but I figured that would hold. It's also on the bottom of the band here. So I think I got in at the second green bar, got faked out a little bit, and then we went up. So went in around, I have to go back at my notes, but right around here, 4106, and wrote it to right about here. I try for, even on the 1-day trades or the intraday trades, I try for about at least 50%. I generally don't wait for 100% unless I'm really, really, really right on the trade and something has really blown through my what I thought. But generally 50%, 60% of the trade is what I'm looking for. I'm in and out within a few hours. So This morning, I took a short up here right as the market was open. That has come down here. I'm up about 45%. There's a lot of volatility in this today. You can see it's creeping back up, but I know I've shorted it here at this level. And you can see that the 20-day moving average crossed over the 50-day moving average. So I felt like I was pretty good. And this 20-day moving average is dropping down quite a bit. Now, since we've started the video, I should probably be out of this trade, but I'm going to let it go because it's I'm still okay on the trade. But you can see that towards the end of the day here, the SPX is gaining some strength. So a trade that I would normally take if I was short for the day would be very similar to this. If I felt I was a little more aggressive, I would go here at the 25 delta and buy back at the 20 delta. You could do this naked like this, but you can see that the buying power, you have unlimited loss and your buying power is huge. So I don't have 77,000 in my account that I want to dedicate to this trade. So what I'll generally do is do a spread. Now my buying power comes down to just $790, my buying power reduction. So that's how the clearing firm at the investment house decides how much of my account needs to be earmarked to cover the risk of this trade. So yes, there's a lot of risk. That's why I like to do spreads. I don't like to trade SPS. I don't like to trade index products without some kind of hedge. And that hedge is by buying the next out of the money strike. Now, if you want, you can, of course, go out a little bit further. And just, you can see if I went out 25 points instead of just 5, now my max profit is 450, my max loss is that, and my max buying power reduction is about 2,000. So still not bad. Much better than an infinity max loss and a buying power effect of 77,000. So I'll generally come in here and do this type of trade about like that. Let's leave it at that point right there. So, and this would be a typical trade: max profit 220, max loss wherever it ends up about 780, and that is this. I'm going to get $220. That's my max gain if I keep it all. And how you determine the max loss is the difference in the strikes, 4160 minus 4150 less the amount you received. So this is 10 points. I received, say, 220, and then the difference is my max loss. Again, on this trade, the probability of profit is 74%, and it expires tomorrow night. So I generally don't put a June 2nd trade. It's June 1st today. I would not put a June 2nd trade on until tomorrow. And so you can see that is generally what I do for those types of trades for gap fills. So big gap down, I shorted. Now, I would most likely, at this point, I would have right here where this crossed, I would have closed out this for 50% and probably would have taken a long for the rest of the day, and just play this back and forth, make a couple trades a day, 2, 3, 4 times a day, to go and just play these things up and down. What else? So there's also a high-low breakouts, and I generally try to fade those. So if let's just take a look at a 3-month chart here. This is a daily. Let me work on something like a 1-hour chart just for this example. So What I try to do as well, so you got to, this is a 3-month chart. And what I try to do as well, it's the same kind of underlying strategy. So I am looking at what am I doing for the day, but I always have to look at what am I doing for, well, where are we trading today versus the high and low. So you can see here we had these highs at this level, which was around 4,300. We've hit those a couple times. We're not anywhere close to 4,300 over here. Okay, that's good. Then I come down here and look, and we had those lows from a couple weeks ago, say 3,800. Okay, we're at 4,100. Okay, so we're not at the lows. So I can see my highs and my lows, and we're kind of trending in between. So that's for right now. For today, it's kind of a neutral play. But if we were getting up to this level again, one of these peaks, and that would be around here, I would most likely, based on some other tools and techniques, but most likely would fade that move and short that. And that would be possibly a longer term trade, maybe a 45-day to expiration, or around that time, or about maybe 30 days. So in addition to that, if we're way down here, well, maybe if we're not that far down, but if we're down in one of these key areas and it hasn't broken and it looks like there'll be some support, I would fade the down move and move up. Now I do have a bias where I think we're heading, I think we have more trouble coming. So what I would generally do if we start getting down here, so I might, and this is what's happened this year is I've sold this, ride it down, make my money, but it still has more to go. And so what happens is this is an easy short. This is an easy short. But what do you do when you get down here? And it's a very hard decision, and it's somewhat frustrating because you've already taken out a lot of the market highs, and now you're sitting in this theoretical example on the screen. But you're in this area here, and you know it could go up as easily as it go down. So I take this short, but you don't get paid as much as you did with these, because the risk now is, and the market prices this very efficiently, is the probability that it could go up or go down starts to even out quite a bit. So you can make money on this down move, this down leg here. The challenge is you just don't get paid as much, but you're taking on more risk. And then you can see what happens. You get these explosive moves to the upside, and that can wipe out your nice gains you get for the day. And you can see here, here's another downtrend. It's like, well, how much more can this go down? I think more, but the problem is that there's buyers coming in, and if you shorted here, you're really you're in a world of hurt in this up move. So really, that's my the gap fill is the big one. The high and low is more of the macro view. Now, one other thing that I do is I also look at the futures market. I'm not going to get into the details of the differences, but you have the ES, and this is the ES, which is the E-mini S&P futures. The M stands for June, and the 2 on this stands for 22. So it's like the old-fashioned stock options that would have you don't really see it now when you trade, but there's a bunch of detail behind it, and each letter or number means something. So it does as well on the futures market. And these really work in a very similar manner. So this was a trade that this is one that I'll be taking off. This is June 1st. So I also, as I'm trading SPX, I'm also trading ES. There are differences sometimes between the two markets. Not very much, because those are gone. The computers trade those the differences between the two, the arbitrage between the two very quickly. So this was one that I took today. Of course, it wasn't a max profit of 3 and max loss of 248. We were trading in this range today, so the trade was a little bit more like, well, we're getting towards the end of the day as well, but it was a little bit more like this, about a 1 to 4. Max profit around 50, max loss at about 200. So about a 1 to 4 ratio. This one, again, this expires at the end of the day, so we have 2 more hours of trading, plus a little bit. So right now, this has a probability of profit of 77%. That this will be a successful trade. This is right at the expected move for the day, which doesn't mean anything if it blows through it. Right now, we're at 40, say 4,100. This is 20 points away. It can make that up in a matter of seconds. So this is not a slam dunk, easy trade just because the numbers all look good. It's not a trade I necessarily would do right now. Now, on the other hand, since we did see, and this is how I incorporate these two in, if we're seeing looking at the today on the 1 minute, hello, computer. Okay, so here's the 1 minute feed. You can see that we're getting a little bit choppy here. All my different colors. So we crossed over the 200 here, which is positive, but we've also pulled back under the 20. And now you can see here that it's broken through the 20 again, not too bad, but it's right at the 50. So this might be a good place where I would say, let me go ahead for the rest of the day and I'll take a bull put spread. So this is a 76% pop. Again, I want the market to go up. I have not much room again. It's only about 20 points, and 20 points can get blown out. I can make a profit of 50, max loss of 200, and that's really the difference. 4,080 minus 4,070 is 5 points. I'm getting about $1, and so that's how that's priced out. And again, we could chart this a lot of different ways, but you can see here, I like to take a look at a little deeper, richer graph service. And you can see here with this volume, there's quite a bit of volume here to push it up. And then it's going to hit this volume up here, and that's what we're getting. We're getting some resistance, some choppiness up here. And when you're trading these are not for novice investors. These are professional traders that you're up against, and they will have your lunch. They will take you out with no problem. So that's fine. You got to know what you're up against. The key there is just keep your trade small. So if I go into this trade and I want to do this right now, it's going to either be a $50 winner or a $200 loser for the day, and that's my prerogative. If I'm going to do something like this, I'm going to go what I would consider all in and take a naked put. Yes, I'm going to make, theoretically make $300, $290 to $300. But I'm taking a risk that I could lose 14,000. Now, is ES going to go to 0 today? No. But what's the risk? What if it goes down 100 points? Well, I'll be out a lot of money. So I just play it simple, play it safe, take the $50, make the $50. If I make $50 in a trade for the rest of the day, I have no problem with that, and I'll be happy. So that is what's happening. I will probably make this trade after I sign off here. So those are my strategies for ES as well as SPX. Good stuff, good times. Contact us. Like I said, we're options trading pilot. Come see us, come talk with us, try us out for a while. It'd be great. We do post everything out on Discord as well. So have a good night. Happy trading.